Hi guys, welcome back to our Globe interviews. This is Starlight here. Today we have a Will meeting for today's episode. Please welcome Will.
Thank you for having me.
So can you share with us a bit about yourself and how you got into the crypto industry?
Sure. So I'm the founder and managing director of Acuiti. We provide research and events into the derivatives market. So my background is I've been in business-to-business publishing for gone almost 20 years now. Starting off in trade magazines. Obviously, the print industry has suffered somewhat over the last 20 years. So moved into online research events. And then launched Acuiti in 2019. And we cover the derivatives market. So our expansion into crypto was a natural evolution as a new asset class as it came into the markets that we covered already. We build networks of senior executives in the global market, and we allow them to share information with each other and with us anonymously. So we're essentially a research business, but we provide our research via these networks. So we have networks for hedge funds, sell-side execution, sell-side clearing. We have networks for proprietary trading firms and crypto derivatives. And each quarter, members of our network are able to ask each other questions and provide responses via our anonymization platform. So our research comes from top executives in the market. And we also do events as well, where we bring together those executives for an afternoon of discussion. But ultimately what we're trying to do is give people a tool through which they can get a view of how their peers are approaching an issue, or benchmark a concern, or benchmark a process, or raise a concern that they have.
Can you share more about the Acuiti's research?
Absolutely. So the way we view research is there's 1,000 questions that people have about their workflow and what they're doing on a day-to-day business. And historically, research has really only addressed the major themes, like investment in a specific area of the market. So what we're trying to do in our research is provide a way for executives to get answers to those tiny questions that they have on a day-to-day basis, whether it's what technology are other firms using, or how firms are approaching a specific regulatory point that may be challenging them at that moment in time. So our research is designed to be as granular and deep as it's possible to be. We always say nothing is too small to ask about, and it's that level of granularity that we always try and achieve.
That's amazing. And I would like to ask, what is the mission and the vision of Acuiti?
So our mission is to increase transparency over operations and regulatory and operational technology challenges. So we want our members of our networks to use Acuiti as a source of information that they simply cannot get anywhere else in the market. So really it's providing transparency, but also enabling senior executives to get answers, to get a view of what their peers are doing in good time, without a huge cost associated with that, with going down the route of, say, a traditional consultancy, which will take 6 months and charge them a lot more than we would charge.
Yeah. Would you see yourself as a crypto skeptic or crypto believer?
It's an interesting question. I'm a firm believer in the underlying technology. I think the implications of the blockchain and DLT and smart contracts are only just beginning to be understood. Having said that, I think, and we'll come on to talk about it, I think some of the events that have happened in the market, some of the directions that some firms have taken, I don't believe in. I don't think they're sustainable for the long term. And I think that's evidenced by the amount of money that's been lost over the last 6 months. It's a sign that the path that was trodden is probably not the right one, but underlying what's happening, what's being developed, I'm a firm believer in that and the potential to change financial markets.
Thank you. What impact do you think that the recent falls in the crypto prices will have an institutional and retail participation in crypto markets?
It's a deep and complex question. I think if you take a step back and look at what's happened over the last 6-8 months, we've seen over $2 trillion of value lost in the global digital assets market. And I think first of all that is a failure of the regulators. They have spent years, 5 years or more, arguing about why they shouldn't necessarily regulate, or if they do regulate, how they regulate. Is this a security? Is it a currency, etc.? And what that's allowed to happen is this bubble to have built up in the market, and it's undoubtedly is a bubble. We can come on potentially to a bit about what type of bubble it is. But ultimately, the regulator's responsibility is consumer protection, and they cannot stand back and say we didn't regulate it, therefore we're not to blame. Where there's been a 2 trillion fall in value, which sadly has fallen predominantly on the shoulders of retail investors. So I think the first thing is that it's a failure of regulation what's happened, and regulators need to accelerate. And I think they are now doing that, accelerating plans to create a proper framework of consumer protection, institutional engagement. So the question that you asked is about institutional and retail participation. Yeah. So I think coming back to the idea of the bubble, I think it's been said before, and I firmly agree with it, that this bubble of digital assets and the crash we've seen is similar. Some people compare it to the tulips in Amsterdam. I don't think that's the case. I think it's much more comparable to the dot-com bust. And what you saw there is a new technology came along. The hype and the excitement created a speculative bubble, but underlying it was something substantial. And I think that's exactly the same thing here. The potential for DLT and blockchain to change how we trade and how we transact is there. But the early hype was too extreme, and that created a bubble on top of the progress. So in the same way you see a decade after the dot-com bust, more change than was ever envisaged in 2001, but it wasn't necessarily the same companies, or certainly 75-80% of the companies that were part of the initial hype fell away, and a lot of the processes that were based on were formed in the initial hype of the dot-com boom didn't work and weren't followed. So I think that's very similar with what's going on in the digital assets world at the moment. I think underlying the market is a very substantial change and a very exciting change, but some of the ways that have been tried so far won't work. And within that, so if you look at the institutional market, so one thing that's notable about the crypto market as a whole is the lack of institutional participation on a scale that you see in traditional financial markets. And I think one thing we've learned from the last 8 months with the falls in prices and the issues that we've seen with companies like Celsius and Voyager is that it's not possible to create a financial market without finance, without the traditional banks involved. And I know this is going to be controversial. I know I'm going to get attacked by some of the kind of hardcore crypto believers for saying this, but fundamentally, if you want to be in financial services, you have to bring traditional finance with you. Otherwise, it simply won't work. Balance sheet is essential. Money is key. And we've seen with the thinness of some of the markets that have been created, the fragility that's created within that and been exposed by the 3 hours capital collapse and the contagion that we've seen from that. Now, obviously, we had a similar thing in traditional finance in 2008, but I think the model that was built in crypto over the last 5 years is inherently fragile. And that is predominantly a result of a lack of traditional bank balance sheet and engagement to support it. So if the dream that I believe in, and I think all your listeners and viewers believe in as well, is to revolutionize financial markets, then they have to do that bringing along traditional banks. And you're seeing that already. JP Morgan have a blockchain-based repo platform, which is really exciting. And that is the kind of early indication of what the potential for this technology. And you see it with technology companies as well, companies like Copper, who have come out of building assets for the native markets, who are now looking at that technology and speaking to traditional institutions about how they can use their technology to enable the traditional firms to leverage blockchain, leverage DLT, and build new processes. And then firms like Baton, who have remained purely in the traditional space, but are leveraging the technology developed out of the native market to change processes. Now, I'm not saying for a moment that banks will not change, and every single bank will survive and be exactly in the position they're in 10 years' time. I think there will be massive disruption. I think firms like Genesis, who are coming along and kind of looking at that PB model, firms like Hidden Road, who are looking at it as well, building their own technology, they are inevitably going to disrupt. And DLT, blockchain, is hugely disruptive technology. And I'm excited about the disruption that will cause, and it will change finance, but you can't build a separate financial system from scratch. It's just not possible. And I think that's been exposed now. I think sadly on the retail question, the experience that retail have had over the past 6-8 months is going to result in a permanently lower retail investment in the market, which is not necessarily a bad thing overall, because of the amount of money, then the ability, or the fact that potentially part of the speculative bubble was created by retail investment. But I think they've been burned, and they're going to look at this much more cynically than they have in the past. So it will set back financing to some extent, but ultimately the strength of the technology and the potential of it, I think, will win out, and we will move beyond this and create an entirely new financial ecosystem based on DLT. I think greater regulation is inevitable, and I think greater regulation is welcome. If you look at, regulation doesn't necessarily stop innovation and progress, but it does make it slower potentially, but more secure and safer for people to invest in. Now, banks historically, or if you again separate the two parts of it, so you've got the banks are developing blockchain-based workflows, blockchain-based solutions, and have been for many years, but can't participate in the digital assets market that, to a large extent, currently is funding the innovation in that space that the banks are leveraging. So I think banks have been let down to a large extent by not being able to get into this market and to provide services. And I don't see it as binary. I don't think you either have a native market or a traditional market. I think the two coexist, the two merge, and the two strengthen each other. So like I said, I think you're going to see, when regulation becomes clearer, becomes established, you will see banks enter the market for intermediation in digital assets in a meaningful way. I don't think that will take away the ability of firms like Genesis and Hidden Road to operate in this market, and the FCM, the native FCMs, like BlockFi and the lenders. I don't think it will take away their ability to operate, but it will create a larger ecosystem and a more stable one in which they can continue to innovate. And they will always innovate faster than the banks, because the banks are huge companies with different priorities for investment. But I think the entry of banks is a welcome thing, and it will require regulation. So in answer to your question, yes, I think regulation is coming. Yes, it will make it slightly more restrictive for people to trade in with the freedom they've been trading currently, but I don't think that's necessarily bad.
What impact has the spread of the COVID-19 virus had on the derivative exchange?
So looking back to traditional derivatives, so COVID-19 obviously was an economic shock on a scale that we haven't seen potentially since 1929. So the function of the derivatives market is to provide a means of hedging risk and hedging uncertainty. So obviously when COVID hit, markets went into free fall. There was massive demand to reposition, to hedge, and to reduce risk. So the derivatives markets benefit massively from that. Volumes were through the roof in 2020 after relatively rapid growth in the preceding decade, or give or take a few slower years. And I think the other thing that COVID-19 had was a stress test on the market. So if you think about, the volumes went absolutely through the roof, unprecedented volumes at a time when banks and hedge funds and prop firms were sending people home. So that stress test, an operational stress test, a technology stress test, an HR stress test, was immense. And a lot of other industries almost kind of shut down while they relocated staff, but the derivatives market was busier than ever. And there were problems exposed. The back office processing of a lot of banks, a lot of clearing houses was overwhelmed simply by the volumes that came through them at a time where there was massive operational disruption. I think what's encouraging is if you look at the volatility we saw in February this year with the Russian invasion of Ukraine. the volumes were even higher then. Obviously, you didn't have the move to home, but the systems and the technology processes withstood and functioned very, very well throughout that period of volatility, which shows the investment that firms made as a result of what happened in 2020 has had another major stress test and passed. So I think fundamentally for the derivatives industry, anything that creates risk and uncertainty is good for the market because that's the purpose of the market. But also it's encouraging investment in technology and processes that are growing capacity overall.
What would 2023 like for the global derivatives market?
So I think 2023 is shaping up to be another busy year. I think as I said before, risk and uncertainty drive volumes in derivatives. And if you look ahead to 2023, you have a number of factors that are likely to drive both risk and uncertainty. Obviously, aside from the Russian invasion of Ukraine and war in Europe, which nobody can predict really how long that's going to last for, or what the implications of that will be. I think aside from that, you have inflation and recession are the two biggest warning shocks, and interest rates going up for the first time since 2008 on this scale. So what that creates is huge uncertainty about monetary policy, which has traditionally been the biggest driver of volumes in derivatives market, hedging against interest rate movements. And very soon you're going to have two directional risk in interest rates for the first time since 2008. And that, I think, is hard to understate the impact that will have on volumes in the derivatives market. And tied to that, obviously, you have FX movements, you have equity movements linked to both interest rates and inflation, and also the threat of a global recession. The final point, I think, or the third point would be COVID. Obviously, while in UK and much of Europe, from what I've seen, it's almost COVID has been forgotten about. If you look at China, clearly it's still a very clear and present danger in China, and I think there's a potential at any moment for it to come back here with the mutation. So I think that risk remains residual in the market. So whereas you could look at a year, say 5 years ago, and you could guess probably a relatively narrow parameter of equity movements, I think in 2023 all bets are off. There's a huge potential spreads in prices, and that the volatility in interest rates is going to create uncertainty and risk for firms that needs to be hedged, needs to be insured against, and the only place you could do that really effectively are the derivatives markets. So I think it's going to be a good year for the markets, but one in which risk needs to be monitored. I think there's going to be events that cause significant pressure on the market, so it's going to be a challenging year.
Yeah, definitely. I feel like after the COVID-19, all the industry, and not only the crypto industry, but also the other affairs is already be more challenge and get more opportunity next year as well. Yeah. So for the final questions, I would like to ask is, what is the next for the Acuiti?
So next for us is we're looking to continue the growth we launched, as I said, in 2019. So we've had something of a baptism of fire, having to live through 2020, 2021 and the challenges that posed. So it feels to me now, for the first time since we launched, we're in a relatively normal environment to operate. So we're just enjoying that right now. We're kind of benefiting from that and looking to grow next year. Our reach currently, our audience currently is global, but we're very heavily weighted in Europe currently, and to some extent the US. My view always has been that Asia is the growth opportunity for the world, and certainly for businesses like mine. So next year we're very keen to expand further into Singapore, Hong Kong, China. So that's a key priority for us, but also looking at other markets like Brazil and South America as a whole. So we want to scale up globally, really build deeper into the derivatives market, and then beyond that, look at other asset classes that we can operate in on the same model that we're building now.
Yeah, I know the next month or the next week, they have a big conference in Singapore, is it?
Who's
As the blockchain.
Okay,
conference
I'm not going to that, but yeah, I'd like to. But our travel budget is limited. But we'll be certainly in Singapore before the end of the year, going to one of the derivative market events.
Oh, that's good.
Yeah.
Thank you. That's amazing. And thank you for sharing. This is all the questions for today.
Yeah, thank you very much. That's been great.
Thank you guys for watching today's episode. If you like the content, please like, comment, and subscribe our channel. And thank you, Will, for coming to our podcast today. And it's really nice to see you and chat with you as well. And yeah, I will see you guys next time. Bye.
Thank you. Bye.